Wall Street's main indexes fell on Thursday as bond yields rose after data showed consumer prices increased more than anticipated in September, clouding the Federal Reserve's interest rate outlook. The Dow dropped 0.5%, while the S&P 500 and Nasdaq slid about 0.6 each. U.S. 10-year yields hit a session high above 4.7% after a U.S. Treasury auction. Will Rhine, CEO of ETF company Granite Shares, said he is paying close attention to the moves.
Clearly, what has sort of stalled the stock market rally, at least over the last few weeks, has been rising yields. And I think that rising yields has been something that clearly is, first and foremost or front and center of investors' minds, given that, the interest rate hikes that we've seen, have been very high. But obviously, the higher that rates go from here, the more chance there is of something breaking in the system and a recession or something deeper happening.
A surprise jump in rental costs pushed consumer prices higher last month, while the annual increase in the core figure, which excludes volatile food and energy components, was the smallest in 2 years. Traders now see a stronger chance the Fed might end up delivering another interest rate hike this year after looking at Thursday's data. Stocks on the move included Fastenal. Shares of the industrial supplies company rose nearly 8% after it topped earnings expectations. And shares of Ford lost 2% after the United Auto Workers Union expanded its strike at the company's biggest and most profitable factory. The focus shifts to earnings Friday as big banks, including J.P. Morgan Chase and Wells Fargo, report quarterly results before the opening bell.